GM. Let's go. Andy's muted. We're 50K fired up. Where we at? Bang. Confetti for the boys. It's been a journey. We're just getting started. Welcome to the Rollup TV. It's August 20th. Andy's going to figure out his technical difficulties behind the scene. We've got a killer show for you guys today. We're going to come with multiple two-guest slots. We've got the Arbitrum co-founder, 𝘗𝘯𝘷𝘦𝘴𝘵, announcing and talking about the acquisition of 𝘬𝘪𝘴𝘬, a smart account platform. You can tell the direction that they're headed in. We've got Fabrizio and Matt from Legion on crypto M&A, mergers and acquisitions. We're going to get into the wormhole and Stargate bidding war. Man, Andy's going crazy back there, but I can't hear him. I'm just going to keep going. And then we've also got the founder of Infinify, Rob, coming on the show as well. And we're going to cap off with Ruslan from Extended, the new purse protocol on Starknet. I'm stoked. Market's bouncing. The roll-up has hit 50K. We had a bunch of clips pop off over the last couple days. Shout out to Naval. That is the true OG, absolute legend. Remember following his How to Get Rich thread, one of the best threads of all time. A lot of that is still very relevant today. And especially amidst the market cycle where we are now, DGen Spartan made a comeback.
Throw me in the other room. Very,
very interesting times. Jackson Hole on Friday. Things happening in the macro markets, things happening in the crypto markets, and we are going to talk about all of it. This is the place. If you want to learn about crypto and you guys want an edge on your own personal side, this is the place to find it. Andy, do we have you? Are you here? Are you with us?
Yo-ho.
Yes.
Yo-ho.
Welcome.
Beautiful day in Hawaii.
Andy made it.
Let's get it.
Today you got the
Rob, how you doing, man?
I'm good. I'm fired up. I had a double colada today, so that's about 7 shots of espresso. A few more than I usually do. And so I'm fired up. I'm ready for a good day. I feel like we're on a roll now with these streams. I was a little rusty coming back, but I feel like I'm back in the groove. How are you feeling?
Yeah, Rob, just give me a sec, bro.
All right, buddy.
We're back. All right. So, Rob, what's your take? Brian Pellegrino just put out a tweet saying, yeah, that's not going to happen with regards to, he literally just said, yeah, that's not happening. 9K likes, offer to buy wormhole, escalated. Holy fuck. Thread guy, Agent Chud laughing. Luigi laughing. What's your take, Rob? What is Wormhole's thought and position here?
I think it's interesting to point out, obviously, Stargate is a protocol that was born out of Layer 0. Layer 0 incubated it. It got spun out. It is essentially its own entity because it is a DAO. It's governed as such. And so now it's effectively like they've gone rogue. Layer 0 has lost control of its own kid. And now they're trying to figure out where should they go. Should they stick with Layer 0? I believe I saw Layer 0 submitted a $110 million bid for Stargate.
For Stargate?
Yep. Wormhole came in with a last-minute bid. This was the Wormhole Foundation came in and submitted a bid while the vote to approve or deny Layer 0's bid was going on.
Yeah, I know that. Like, it's just happening right now, right?
We're in the midst of it right now.
Crazy.
I think this is great. I mean, we're seeing action play out. You don't see a lot of DAOs that are talking about it. You don't see a lot of M&A conversations happen in the wild, just in public. But because this is on chain and it's token holders that are making these decisions, we're able to see this play out in real time.
Dude, I'm looking at a beautiful rainbow right now. It's coming off the half of the horizon on the ocean, and it just, it's got me thinking that, maybe Wormhole is trying to, cause some chaos in the universe, you could say. I think this you know, I don't know. It's just interop always has the spiciest drama, but there's just no way that Layer Zero loses this, in my opinion. Like how? Okay, so Brian just put out this tweet saying that's definitely not going to happen. My take is basically, look, if Wormhole is going to bid to stir the pot to kind of shake the, you know, kick the hornet's nest, all Layer Zero is going to do is just try to outbid them. So maybe this does turn into a bidding war. What would be absolutely insane is that if actually this Wormhole move made Stargate rethink that they could get a better offer from Layer Zero, decline the proposal, or like vote against this proposal, which I'm not even sure if that's would be able to happen, because I still think that a lot of the Stargate token holders are Layer Zero either shareholders, equity holders, owners, etc. But if Stargate holders somehow rallied against this, said no to hear Wormhole's offer, forced Layer Zero to offer more, that would be a crazy outcome. My take on this is that this is just classic competitive fighting, and I think that, you know, we'll probably see more of it in the space.
I think it's great. I love it. We love competition. We're not afraid of it around here. And so to see, obviously, two competitors, Wormhole and Layer Zero, go after it. Obviously, these guys are competitors in the bridge landscape. There's a price at which, yeah, Stargate is going to reconsider Layer Zero's offer if they think they can get more. If Wormhole does end up acquiring Stargate, that's where a lot of the bridge volume happens on Layer Zero. That is retail, the community-facing product. Everything else is labs, happens behind the scenes. So Wormhole could increase their volume, right? Obviously, they've got quite a bit of Ethereum to Solana volume happening now.
Yep.
Interestingly, the Wyoming stablecoin that we talked about last stream, Layer Zero is instrumental in
they are.
Well,
Layer Zero is basically an asset issuer now. I mean, that's kind of what they are.
I mean, you can just think, you know, what is Layer Zero? Effectively, right? It's a native asset issuer that isn't beholden to one particular chain.
Well, you love to see it. Fun times in space. Shout out to the Rollup for hitting 50K. That was a vibe. I'm gonna hit 70K in the personal soon. I dropped a couple little updates on my account as to what's coming, so we'll get the confetti. Also on track to have a pretty big year to end this year strong. We got a couple big deals in the pipe, and some prediction market stuff that could be coming soon, guys. So let's get a money rain for the boys. Boys are cooking. Market's green. Back.
I got one more piece of interop news.
That's coming soon.
Hey, shout out to Across, the third head of the beast here in the
which has seemingly
world.
lost this battle just so badly. I'm sorry. I just
Across.
have to say it. Across is no longer in the interop picture. Why? They are for like the multi-chain users, and I really like them, and I love Hart. I love Amanda. I like the team's great. They failed to capture the asset issuance tokenization institutional market, and that is where all the value is. And they are not even in the picture anymore for cross-chain. They're not in the picture for the work that's being done with Securitize and on Avalanche and KKR and Apollo. It's really just Layer Zero, Wormhole, Chainlink, and it's really those three.
I'll tell you why you're wrong. Because
I'm not wrong.
All of the RWAs and stablecoin issuance, for the most part, is happening on Ethereum. If it continues to happen, I mean, look at RWA.xyz.
I mean, like
RWA data provider,
the
$7.5 billion, more than double second place, which is
but if you take all the others,
L2, and as long as this activity continues to happen on Ethereum and its L2s, Across is the leading provider for Ethereum interop and stands to benefit and gain the most from the transfer of RWAs and stablecoins within the Ethereum ecosystem.
You're just wrong. I mean, you're just wrong, but that's all right. Also, I think intents are also like they're still really good, but I don't know how. I think that there's more critical flaws in the design than previously thought. So
maybe
we'll kind of see.
For now, Layer Zero has 88% for its proposed acquisition of Stargate. And so,
Yeah. Wait, 𝘰𝘪𝘴 has 88% controlled.
this is a snapshot vote that is currently ongoing. It ends on the 23rd of August. It's been going for about 4 days. So we're about halfway through this vote. It's a week long. And this is 𝘰𝘪𝘬's proposed acquisition of Stargate. They have all of the things that talk about why 𝘰𝘪𝘬 is the right entity.
Yeah, we'll see, man. I think if Stargate community turns it around and thinks that they can get more money from Wormhole, then they might try to pull it off. So
see, I don't know if you can revoke your vote. And with 88%, and they're at 600% of quorum. So Wormhole may have came in.
And when did you say
a
it
little too
expires?
late? This vote ends on the 23rd.
Okay. All right, guys, we got Fab and Maddie in the back. They are the founders of Legion. Today, Legion announced their raise. We're gonna get the guys up here to congratulate them, get the down low, what's going on. So let's get the boys up and let's have a stream. I think the guys are on their new equipment. It's good to see them. And yeah, boys, welcome to the stream and congrats on the raise.
Thank you. Bloody good to be here, and good to see you again, fellas. And this microphone was recommended by Andy, so
yeah, Fab, dude, it's good to see you in the flesh again. I mean, it's been a while. I've missed my Bali waves this year, so I need to get some.
Still time for the year. Still time for that and the rest of the year.
Yeah, all right, guys. Surely you're headed to Singapore for tokens. So.
Oh yeah, of course, of course. We're gonna throw you guys the confetti, the money rain. Congratulations, guys! Huge day. You guys raised $5 million for some of the best investors in the world, Brevin, Howard, and others. Guys, how did you pull this off? Coinbase Ventures, GSR. A bunch of angels, Crypto.com, Coinbase Ventures, Cyberfund, Systemic Ventures, $5 million raised with 1.25 reserved for the public. I think it's your first time raising, boys, but you clearly have product market fit with your product. Maybe just give us your what is Legion and how'd you guys pull this off?
Absolutely. Fab, do you want to take that one?
Yeah, for sure. I mean, I guess just on the round, Van Eck, Brevin Howard, the two leads. We've got a bunch of the Western exchanges on board, Kraken, Crypto.com, Coinbase Ventures, etc. I think, to be honest with you, we've been working on a fundamental step change in what Legion is since January. The funding is nice for sure, but it's kind of just the start of the journey. We've got a ton of things to roll out for the rest of the year. But basically TLDR on Legion, essentially we are a public fundraising platform. The premise of Legion in the early days was going to take the same two-way opt-in you have in private markets today. You know, founders will sit down with a VC firm, etc. You'll chat to each other, you'll like each other, you'll invest. Not all financial capital is created equally. They typically write checks, but then they'll also do introductions, or you can leverage their brand, or they'll provide liquidity, whatever it might be. We're going to take that same two-way opt-in and apply it to the public market. So not a crazy concept, not a different idea, but that's largely based on this premise of this Legion score mechanism that we have. We put out our white paper over a year and a half ago now. Geez, it feels like 20 years with the idea of meritocratic fundraising based on what value people can bring. So that's a TLDR and basically what Legion is today. And as mentioned before, there's going to be a huge coup of how public fundraising is done on chain moving forward for the rest of the year.
Yeah, this is just today's announcement of the raise is just the first of many huge updates that people will be very surprised about, I think.
Yeah, so Maddie, you guys kind of started as like, all right, there are this kind of return to ICOs. People want to invest into early stage projects. There's not that many great ways to do it. It's really just been Echo and Legion with two different models. Legion being a bit more lenient towards projects, allowing projects to select who they want to invest in terms of which communities. That's gone right. Well. You guys have done a ton of raises. So what is now that you guys have raised $5 million, what is this money going to be spent on towards the product vision? What is the product vision? You know, I see in this tweet, you guys are talking about, you know, building the most trusted brand in on-chain capital formation and bringing promising deals to public and institutional investors. What does that mean? How will you spend the money to fulfill your vision?
Yeah, great question. I mean, as Fab mentioned, right, at our heart, we're a platform for on-chain fundraising, right? Anybody can kind of see the deal. Anybody can apply to participate. I really got drawn into crypto back in just the start of like the ICO craze back in the 2017, late 2016 days. And that was some of my favorite times in the space because there were these amazing opportunities that anyone could kind of get into. Obviously, that gave way to bots, to Sybils, to mercenaries, right? To a lot of the problems, to scams. And so what Legion is doing is fixing a lot of those problems, fixing the scams by kind of requiring projects to have certain disclosures, only working with the top tier projects, making sure those projects, the holistic launch is well designed, right? So not just narrowly looking at like, oh, this is a launch pad for selling a token. No, that's the wrong mental model, right? This is a whole new way. This is like the IPO version of a token sale, right? In fact, kind of the vision, the world we're building towards is where teams are doing kind of a merge, like the future of IPOs and the future of ICOs kind of merge. That's the world that's coming together that we're building for. And so on-chain fundraising, expect that to be a bigger thing, whether that's tokenized equity, whether that's pure kind of DeFi, governments tokens that we know today, whether that's real world assets, all of it's coming together. That's why we've raised from kind of both the TradFi and the crypto native investor sets we have. We've been meeting with regulators, having conversations. If you see the article in Fortune, right, it's a pic of Fab and I right before going to meet with the SEC.
Suits.
Yeah, rocking the suits.
Fuck
so
yeah.
Crypto is growing up, right? And we're saying, we love crypto for what it is, but we need to kind of, adopt safer rules that prevent some of these scams and then help real human beings who are ready to add value get access to these early investments that otherwise only VCs, bots, would have access to.
I think just to put that in color a little bit is like looking at it from an IPO perspective. In 2024, there was north of $126 billion in IPO proceeds, right? You compare that to 2024 for public token sales, it was south of 100x of that, right? So there's still a ton of room to grow, but we've been like permables on blockchain as being, the best tech for global capital formation, right? Programmable, it's on 24/7, it's global by nature. And as Maddie said, we very much see the convergence of that being unlocked by a lot of the new regime changes, the regulation side of things. So you're all right. We had suits. I'm not a suit owning or wearing guy, but as Maddie said, things are changing. So
it's a very tiny, small part of the budget of the raise goes to suits. Yeah, for everybody.
Congrats, guys. So you guys now have several of the top centralized exchanges on your cap table. We saw Crypto.com, Coinbase, Kraken, all participated in this round. And so when we're thinking about the entire capital formation life cycle, now we've got ICOs, IPOs, like you said, these two are converging. And then you also have the listing partners on your cap table at the other end of that life cycle. So when you're kind of talking to builders and you're talking to founders and you're explaining to them, okay, guys, look, you should raise on Legion because X, Y, and Z. What is the pitch to those builders and those founders? Kind of persuading them, aside from going to the typical capital formation route, raising a round, do your ICO on Legion and go through our capital formation cycle.
Yeah, I mean, I'll give my 2 cents. Fab, give your elevator pitch as well. But for me, it's super simple, right? You launch with Legion. You can hand select the most in a data-driven way based on-chain, off-chain, social, developer kind of stats about people. Hand select the right token holders for you to launch. Get the widest distribution. Work with the right market makers. Get the right liquidity, and really optimize not just selling a token, but launching your project, right? That is the end vision, where almost like for those who are familiar with TradFi, right, you have these underwriters of IPOs that are coordinating everything and making sure this stock coming to market is ultimately a success. That's kind of what we want to do for ICOs, right? Underwrite ICOs, if you will. Not the terminology that everybody gets in the space, but for TradFi people, that seems to resonate.
Yeah, I mean, I'll just quickly add to that it's spot on. But as said before, we've got a ton of things to announce for the rest of the year. I'll hold my tongue, but you'll see how a few things might be changing in the coming few weeks.
Oh, Andy, can't hear you, but I think you've got a good question that you're cooking up. Nope. All right. We'll keep it rolling here. So that makes a ton of sense when you're talking to founders and builders. I'm curious, maybe you could shout out, like, what are some of the most successful launches, ICOs, that have taken place on Legion so far? And then thinking forward, what are some of the sectors that you guys are most excited about?
Yeah, sure. I mean, so far, some of the most successful ones, one of the ones that I think the most recent one to go liquid, to launch their token, was 𝘬𝘳𝘃, AI agents type of platform. That has done some numbers. I know a lot of people who are fans of theirs. They did a sale on Legion at like a 45 million, same valuation, which is true of almost every sale on Legion. You're getting the same valuation as VCs or better. In the minor cases where there's an exemption to that, you are getting materially better vesting. And that's always transparent, right? It's always transparent. Here's what you're paying. Here's what other investors have paid. But yeah, we're super fans of that transparency, that disclosure. And we see teams like 𝘬𝘳𝘃, we're excited about Almanac sale coming up. They've also a superpower AI agents platform. The Fuel sale that we did that really kicked off our user growth late last year, that did a 4x after the sale. So people are starting to realize that, when you look at the top tier projects and you set them up for success, there's a lot of benefit to getting the right people, not just widely distributing your token without any kind of selection process involved.
Yeah, and I think I just maybe want to add to this as well. Like, we talk about VCs, we talk about like public. We've never, like, there are good VCs, there are bad VCs. There's good public, there's bad public, right? Yep. Where for us, like, you actually need a mix in your cap table, right? I think we've been mega bullish on having the public involved in a meaningful way, and that should join force from the type of value that a VC might add to. So I think for projects, we want to optimize the chance of success. Being a founder is not an easy job. Growing a successful thing is not an easy job. But yeah, we basically just want to clarify that. We do have our own public round coming up too. So looking forward to that.
Yeah, that's gonna present quite the opportunity for Legion's community, our community, everyone who's watching, to participate in the same round that these VCs, we named all these centralized exchanges, yep, as well as VanEck and the others. These guys got in, they're participating in the round. Everyone listening has the opportunity to do so as well. I'm curious, is there any sectors that you guys would sort of differentiate and pick out? Okay, this makes sense to do maybe the more traditional way, and then some other sectors that make more sense to do in this more democratic, more open-ended ICO style on Legion?
I think it's a fair question. I mean, I think, obviously there are certain types of products that lend themselves, well to a consumer focus, right? And so consumer apps would definitely be like an obvious choice for get wide distribution, get like, token holders, your community become evangelists of the product as well, right? And getting it out there, it's something that you can use, right? Which is largely a part of Hyperliquid's success, right? Is that everybody uses the product as well, right? So they really understand it. They feel attached to it. I think that, and then also B2B, more institutional plays that are generating a ton of revenue, where it's just like, okay, I'll stake the token and get distributions. Like those are the kind of the two metas I see being the most successful at the moment. And so I think those would what we'd be focused on, at least for the short term. But we're not trying to be focused only on a certain vertical, right? We're trying to be as agnostic as possible, facilitate capital raise formation for where the next wave of innovation is coming. And that could be very soon, robotics and neural interfaces and all these cool tech pieces that might have native tokens, might have tokenized equity, might have something in the middle that hasn't even been discovered yet, but the fundraising will happen on chain, right? That will be the rails that powers it. Yeah,
this is the idea of internet capital markets, the early stages of it before these things go public and they really participate in a liquid market. This is the private market that you guys are helping to democratize and open up to the entire world. And I think this is indicative of a greater trend where more and more things are becoming financialized. There's more and more that's happening. And now it's great. I mean, I think we may feel similarly about accredited investor laws and maybe like laws in general. They're there to protect us, right? Why can't we protect ourselves? Not really sure sometimes. So how do you guys think about the future of capital formation? Like maybe a more general question here. You guys may see this similar trend when you're opening up the investor pool to people who may not be as experienced with this. Is there any tools, any research that you would recommend to people not from a financial advice sort of angle at all, but from a educate yourself sort of angle, do your own research angle. What can people do to support themselves and make sure that they're poised for success here?
I think that's a great question. And crypto has always had an ethos of like, be responsible for your own actions, right? Like educate yourself. And I think as we go long tail and wider mass distribution, we do have to balance that a bit. We realize, right, that not everyone, for instance, should be self-custodying like their entire net wealth, right, in a wallet where if they lose the key, they're screwed. So I think there's a healthy trade-off, and that balance is, something along the lines of what we've put together for some of the investor sign-up process of gauging how well does someone understand the basic concepts of crypto, and do they really understand the risks involved. And at the end of the day, if they say, I'm a consenting adult, this is something I understand the risks, I want to get into it regardless, I think most people in crypto would agree, leave the government, leave the regulation out of it, let them do what they want to do. Yeah, definitely. I mean, I'm not going to comment too much on this because it's a funny topic, but switching gears a bit towards the kind of birth of Legion into now, I'm curious, like, how has it been working with the Delphi team, kind of like incubated, if you will, with Anil and the rest of the team there? How have they helped you guys grow to where you are now? How'd they help in the raise? Like, just like, what's that whole process been like from start to where you are now?
I can take a stab at that initially. Yeah, I think terrible guys. No, they're superstars. I think like where we work on a day-to-day basis with the team, right? I think from day one, we have them like lending a hand on a ton of different things, right? Our like the pure Legion team is still pretty small. We like to, both Maddie and I like to stay very lean, right? Only grow when it's a necessity. Sometimes we're punching out 20-hour days, 7 days a week. So maybe it is a necessity in some parts. But yeah, I think like broadly speaking, they're an extension to a lot of what we're doing. If they weren't here, we'd obviously continue to operate and do our own thing. But yeah, they definitely do add a lot of value. They've been around the space for a very long time. If you're familiar with how Delphi actually originally got started, you'll know that they were just a bunch of friends that met. They came together, they're ex-Bloomberg, ex-traditional finance, had enough of it, and then basically pulled their own capital together. Were trying to raise a fund. It wasn't really working. And then they kind of just went all in on THORChain in the early days, and they kind of hit it big. And then they said, all right, this is actually like something we can be onto here. And in some ways, we kind of want to recreate that same story. You had a ton of friends coming together that they weren't a big name. They weren't a huge brand, but they were super smart. They were writing really great research reports. And as soon as they did hit it big and they developed a name, they're like, oh, looking back, like, oh, why didn't we have access to this before? And that's kind of the core ethos of a lot of what we're trying to do with Legion. So yeah, we kind of came together, Maddie, myself, and the team. We know each other for a while, through the good times and the bad times of the Terra blow up, and figured, capital formation, something we're super interested in. 𝘁𝘁 is a big proponent of that as well. And yeah, we're basically here to a lot of the kind of co-design and thinking we've done until this point.
Yeah. I mean, it's definitely like, having that experience in your back pocket is super, super helpful. Also with the raise too, I'm sure it was quite helpful to have that kind of, just them in your corner. I'm actually curious from a raise, because I've never raised for anything like, substantial like this. I'm curious how your experience was, and if you have any advice for other founders who are raising right now or who are looking to raise. I mean, I get one quick piece of advice: do not skimp on the lawyers you work with to close the round. It can be very, very painful, very drawn out if you skimp on it. So we maybe made some missteps early on in the process, but got it figured out, got it worked out, got it quickly closed. But you got to spend money to make money, as they say, or to raise money at least. So that is another aspect of the problem that we ultimately want to solve with Legion. So right now the raising process is like I think the appetite is like somewhat there, not nearly as hot as it was in the past. Did you guys find that it was more difficult than you expected, easier than you expected, or just about where you guys thought? I think maybe my take on this is that I've been part of
bunch of different projects at different stages, right? And I think a lot of this just comes down to relationships, right? If you're building a relationship over time and you're getting to know a lot of these capital allocators, whether they are actually professional VCs or angels or just each other, right? I think the earlier you can start those relationships and the better relationship you have, the much better chance they are to kind of back you going into something. I think you probably face a lot of friction when you don't have a big brand, when you don't have very good relationships with a lot of people and you're trying to come in. You might have a fantastic idea, but most of this stuff, people are looking for social proofing. They want to know that, oh, this is like a really exciting deal, or these people found this interesting. They use trust by proxy. So there's still some fundamentally the private market itself, the fundraising process 100% needs to be fixed. We're seeing some teams, even like MetaLex from Gabe, for example, kind of trying to shore up a lot of that. Like that in itself, 100% needs to be fixed. I think if no one else has fixed it in a year or so, I think Maddie and I will have had enough of it. We'll go back and try to take a stab. But yeah, I think it's just like find your first believer. Once they're in your corner, you've got your leads, then I think the rest of the stuff is just like be strategic. You don't want to rush into everything. I think it's like, some people do add a ton of value. Some people extract value. Some people tell you they'll add value and then they don't. Do reference checks, make sure you've got a good cap table, because like really the whole idea of this and the whole idea of tokenization is coordinating real world behavior at scale. If you can distribute that incentive alignment to people that are on board and want to push the mission forward, right, then that's just like super helpful for anything that you're doing. If you have people working against you or very neutral or not super bullish, it just adds a bit of a weight when you don't necessarily need it.
Yeah. It's funny that you guys, to raise for Legion, you had to go to the private markets to raise, which is normal. But then you've set out this $1.25 million available, which I assume you guys could raise that amount through Legion. Is that correct, or is that alpha? Because that's just like second order thinking here. It's not a crazy thought here.
It's probably not the craziest conclusion to draw.
Just a thought.
There's regulatory hurdles, right? Like that's been the irony from day one, right? To like open up the market, we have to have capital to fix the regulations, and then but that's our goal, and that has been our goal from day one, is live by our ethos, be kind of community owned. The idea here is that community is also a co-lead of this round, writing a bigger check than either VanEck or Brevin, who also co-led the round. So stay tuned on that and the timing, but I think you're on the right track.
Yeah, we are bullish as hell on public fundraising, right? We're going to walk the walk and talk the talk, right? We're not just going to say it's good and then go out and only do private round stuff. I think that would fundamentally mean things are broken.
And we have all this data. Like we're itching to use some of our product. I'd say, we have all this data. It's on chain. We can see
and stuff.
Exactly. We know who's going to add value. So it'd be kind of silly not to use that information in some way.
How do you guys think about the last thing? I know that you guys probably got to run. How do you guys think about the difference between some of like the InfoFi mind share value of certain influencers or groups or people on Twitter versus like other metrics of value that are provided via like GitHub scores or experience or on-chain experience? Like, is there a hierarchical order that you guys view somebody's value in their social capital when it comes to being on the cap table? Like, is there a way that you guys prioritize this personally or with Legion?
I mean, first, super quick for myself. I mean, there's no strict priority because it all depends on context, right? Maybe you're a B2B product and you need like, very large institutional introductions and developers. So like the mindshare stuff matters less. Maybe you're a consumer app, the mindshare app and like degen on-chain activity matters the most, right? So it's all contextual to what the project ultimately needs.
Got it. Cool. All right, guys. Well, appreciate your time. Congrats on the race, and see you guys in Asia in a couple of weeks. It'll be a vibe for sure.
Yeah. We got an event on. Come on down. And,
there we go. We're throwing events now.
Maybe cheat off for a wave after. Something like that. We're super stoked. You're gonna hear a ton of like pretty exciting things. We've been working 7 days a week for a bloody long time.
I know you have.
I'll tell you that.
I know.
And
too long.
When we were in Bali, we were both up till 2 a.m. daily.
Yeah.
And that was
still getting waves there.
It's been a whole year. So
that's true. Always love to see you fellas cooking. The Rollups crushing it. We're super stoked to see that. So big love, and looking forward to the future.
All right, boys. Be easy. Speak soon.
Appreciate it.
Congrats, guys.
Cheers.
Everyone give him a follow.
Yes,
If you're
sir.
a builder, founder, send him a DM.
Legion.cc, baby.
Thank you. Cheers.
$5 million raise. One last money rain for the lads. All right, guys. It looks like the wormhole and layer 0 situation is growing. We've got thread guys saying "fuck it, Pellegrino mode." Brian quote tweeting that with a fire. Then he's going on some other stuff. It looks like our team just got our clip out. Not sure the copy represents exactly what we meant to say, but that's all right. First to comment on the situation here, it's the Rollup TV. We got Steven from Arbitrum Off-Chain Labs up next with Derek from 𝘂𝘂𝘃. Basically, what happened recently was Off-Chain Labs acquired 𝘂𝘂𝘃, and they're looking to build smart accounts. So I think one good question for this is like, dude, I'm so tired of having different USDC balances on different chains. You know, I think another good question is the multiple approvals on Ethereum versus Solana. That was a debate. And yeah, I mean, I think building a unified development platform is more about what matters here for the guys. So,
oh yeah, more M&A, wormhole and layer 0 in a bidding war. Steven from Arbitrum was able to get it done. Derek from 𝘂𝘂𝘃, they were able to get it done quick and easy. So we're going to hear all about the M&A process. Maybe they could give us a take on this whole wormhole situation after we talked about all the exciting things that 𝘂𝘂𝘃 is going to bring to Arbitrum. Very exciting times. These guys are getting ready in the back. Now we're going to bring them up.
Yeah, we should definitely ask them about that, actually, if they've seen it.
Oh, yeah. I think these guys are almost ready to go. We're going to give them just a moment.
Yeah, Rob.
Oh, yeah.
Yeah, pretty funny set of events this morning on the timeline with the layer 0 and wormhole debacle here.
There's always something.
Yeah, there is. All right, guys, we've got Steven and Derek in the back. We're going to bring them up, and we're going to talk the recent acquisition. We're going to talk UX, solving some of the big problems in crypto. Steven, Derek, pleasure to see you guys. Thanks for coming on.
Hey, it's great to be here.
Nice to meet you, MD and Robbie.
Welcome, guys. Steven, good to have you back. Derek, welcome to the show. And guys, congrats on the acquisition and all of the success so far. You guys get a big confetti burst, and we're gonna get into it. There's a lot of M&A happening, not just in the crypto markets, but in the industry in general. And so maybe we'll cover a little bit about what's happening on the timeline now. But before we do, guys, would love to hear how this went down and why it went down. Steven, maybe you could start and tell us a little bit about what you saw in Derek, in 𝘂𝘂𝘃, and why it was such a great fit to bring that into the Arbitrum family.
Absolutely. There are two ways that I think about what we do here at Off-Chain Labs. One way is viewing the people, and we are the most talented technical and non-technical people in the space. Really an incredible group of people, amazing minds. And what we try to do is really work with the absolute best. And there's no question when you look at that lens, Derek and team, really not only fit well with the team, but also extend our capabilities and are super smart, super talented, but also bring a wealth of experience in areas that we are only venturing into now. So that's like one viewpoint. But the second one, Off-Chain Labs is interesting as a scaling company, at least primarily as our first endeavor. And the thing is, if you look at all of our competitors, they're kind of built scaling into their name and built sometimes even the word optimistic or the word ZK or Snark or Stark, right? Very, very focused on one mission. And Off-Chain Labs is kind of a little bit more generic in its naming, and it's not accidental, because I never thought of ourselves as, hey, we're the company that's going to scale Ethereum. I thought of ourselves as, hey, we're the company that's going to solve the hardest problems facing Ethereum and more broadly facing the adoption of blockchain systems today. If you rewind, 7 or 8 years ago, that problem was scaling. And I think we contributed heavily to that, but we as an ecosystem have largely solved that. But what happens is, we're never done. Like, when's the last EIP? Never. When's the last, AIP? Never, right? We're always, what happens is you solve one problem and then what was previously the second largest problem is now your biggest problem, and you have to solve that as well. And that's how I think of it. If you look at off-chain labs, we started off, at layer 2, right, at the rollup scaling layer. With our Prism acquisition a few years ago, we moved down to layer 1 and said, okay, hey, we need to like build these things together. We need to solve things like, blob space and data availability in Ethereum. And we wanted to contribute heavily to that and just to Ethereum development. And now we're actually moving up in the stack and saying, okay, we've solved, this problem, but now, first of all, the second problem is larger, but also we've created some problems of fragmentation. Right now, there's all these, which I don't think is like the largest problem in the world, but the idea is that we have to solve that. And so naturally, you're seeing us expand above the, higher up in the stack to integrate these things and build them together, but also to really tackle some of the hardest problems. Derek and team are the foremost experts and pioneers when it comes to smart accounts and the things that you can do from a UX perspective, from an interop perspective, both within the chain UX, but also different chains together are really, I think incredible today. But we're only scratching the surface. And naturally, as we don't just focus on one part of the stack, but build these things together, I think we can ultimately do so much more. Right? If Derek's sitting in his own company and I'm sitting in my company, and we're not coordinating, then there might be features that we could build together that are ultimately going to not connect as well. But as we build the entire stack together, I think ultimately it's going to be better for users, for Arbitrum users, for Ethereum users, and for crypto users generally.
Derek, when I think about some of the largest issues that we face on chain, you think about having multiple USDC balances across different chains. You think about the approve function on EVM based chains when you do transactions. So basically 2 signatures or 2 ledger taps. You think about gas fees. As you guys have pioneered smart accounts, bringing them into off-chain labs, what is your focus on, these problems or other kind of user experience improvements that you aim to bring here to off-chain labs, as well as the broader ecosystem at large? How are you going to help the end users, the developers, to kind of help make this a more unified experience?
Yeah, that's a great question, Andy. So I think to Steven's point, I think like one thing that people don't realize about UX is that when it comes to Web3, UX is not something you can solve at a single layer, right? So for example, if you think about like the problems you mentioned, the issues with the fragmented balances, the issues with, for example, just like really slow cross-chain transactions, the issues with, for example, like gas fees and whatnot, those things that actually require fundamental support, not just at the wallet layer, but at every layer of the stack, such as like the solvers, such as the chain itself. So ZeroDev, like as a company, like we have been focusing singularly on the smart account layer, right? And I think it's fair to say that we've become one of the most successful solutions in that layer. But before I started talking with Steven and Off-Chain Labs, I think we really started to feel the limits of how much we can do by just innovating at that layer alone, right? So this is why like when I connected with Steven, we really, I think like resonated on that vision of like solving Web3 UX through one single unifying stack, right? So at Off-Chain Labs, my biggest mission is to really innovate not just at the wallet layer, but really across the stack and think about UX holistically, and essentially just like drive updates from like every layer of the stack, like the chain layer, the intents layer, the solver layer, the bridging, the wallet UX, the smart accounts. And by doing so, I think that we have the opportunity to offer the most compelling UX solutions, to the most valuable companies in the world.
Yeah. I think to put it more kind of tangibly for our audience, for the users of Arbitrum or Orbit chains or just EVM L2s in our community, how do you guys foresee this collaboration, this acquisition, this merger to directly impact my experience using Arbitrum 1 or using an Orbit chain or using an L2? How will I feel this from a user perspective? What is the timeline for me to feel this? What is the vision for the end users to feel this? Or, on the contrary, for developers to feel this? How does that timeline look?
So I think like really tangibly, right? So I think you can expect, first of all, cheaper transactions. Secondly, you can expect that a lot of like the complexities around transactions will be abstracted away, such as like gas fees, right? Like very soon, when you use most of the applications that you use, you won't really either you won't really be paying for gas, or you'll be paying for gas in the token that you are already using. Meaning that, for example, if you are trying to, if you are trying to use USDC to buy an NFT, you won't have to own both USDC and ETH, right? You can just do a USDC transaction, and the gas fee will just be taken out of the USDC, right? So that general category is what we call gas abstraction, right? And then the second thing is that you will find cross-chain transactions to be way more seamless than before, right? Because right now, people just take it for granted today that if you want to use an app on another chain, you have to first bridge tokens to that chain, right? And sometimes you have to bridge more than one tokens, because again, you have to bridge both the gas token and the token you actually want to spend, right? So very soon, all the EVM chains at the very least, but we even have the idea to expand that to non-EVM chains. But basically, like all the chains will feel like one unifying chain, right? Like if you own USDC, you own USDC, right? It doesn't matter if you own it on Arbitrum or on some other chain. You can spend USDC wherever you want, right? So that's at the intop layer. Secondly, and then just on the wallet's authentication layer, very soon, managing seed phrases will be like a thing of the past, right? Like it would be super commonplace for people to manage their wallets through things like social, things like phone numbers, email, passkeys, and the really important thing is that we can achieve that without sacrificing security. Meaning that you can literally set up recovery/guardian setups that are as advanced as you need, right? So for example, the users of a large banking application might set up their safe, or some other multisig, as a way to recover their bank wallets, whereas the user of a consumer app, might just be using their Google to log in, right? So we are also implementing authentication/recovery in a very granular way, such that it's gonna fit all types of applications, right? So because it's not good enough to just be to make what is easy. It also has to be secure, right? So we're really trying to essentially achieve both ease of use and security when it comes to the wallet UX. Yeah. So those are some of the top examples.
Steven, you have this saying that I'm blanking on, that this is just hitting on. It's like he's your chain, your rules.
Yes.
Derek is saying your chain, your rules right now.
Absolutely. And by the way, one of the things which I think is important, that Derek mentioned is with Zero Dev, the existing projects, and actually also more broadly, we're not only thinking about the Arbitrum ecosystem. I like to give this other example is in my town, there are 2 pizza shops. They hate each other, but I like both of them. Right. And I'm not in any, I don't believe that users or even developers, want to limit their interop or limit their user experience to the set of chains that also made the same technical decision as they did, right? Maybe to orbit chains, right? I think your average user is going to want to cross these boundaries all the time, whether it's using an orbit chain and also using Base, or also using an OP chain, or also using, dare I say, Solana, right? The idea is that, and our goal is actually to create a unified experience, certainly for all Arbitrum chains, certainly for all Ethereum chains, and even more chains, more broadly. So we're viewing this as really a way to create, better UX for the entire crypto ecosystem. And there's already so much that you can do. To Derek's point, if I'm a user on, say, Arbitrum One, and I have USDC, and I want to buy, say, an NFT on Ape chain, and the gas there is an ape, there's just a lot of steps in this process. And if you're a savvy user, you'll know, okay, I can use a cross for this or layer 0 for this, and I can do it. You can figure out the steps, right? There's ways, there's tooling to help step, but ultimately it's at the UX layer that a lot of this just doesn't exist today, and it's complicated. So if you're not a savvy user, you'll just look at this and say, I don't even know what to do. I don't know how to get those assets there. And there's really no reason that we can't simplify this. I think this is actually a mistake we make sometimes in the Ethereum community. And I come from a research background, so I'm comfortable saying this because I put myself included. Sometimes we look at things more from a research perspective and think, okay, all we need to do is get the smartest people in a room for a couple of hours and get a whiteboard, and we'll build a protocol that solves interop or solves fragmentation. But the reality is, I would say that 10% is the deep protocol. 90% is the work that Derek and team are doing, and we'll be doing more of, is actually packaging this up for smart wallets and smart accounts, packaging this up and delivering it to users in ways that they can actually use this. And over time, we'll improve that 10%. So we'll swap out some of the underlying infrastructure as, we have better intent protocols or better other protocols to actually fill some of these needs. But there's already so much that we can do today, but it lies today in the realms of different tools that you need to be savvy to know how to use. What we intend to do is package this up for users and give you these abstracted experiences that you don't actually need to worry about these details or be in the know of exactly what tool to use for what the specific workflow that you want to do today.
This is a very forward-thinking approach. Stephen, you mentioned thinking about what is the 90%, right? And I think this is increasingly more and more important as we're starting to onboard the next wave, who may not be as crypto native as some of us as power users or early entrants that were, farming and DeFi and all these things back in 2020. Congrats again, your partnership with Robinhood. They're bringing in all of their distribution channel and now putting a lot of that on chain and on Arbitrum. And so Derek mentioned custody, self-custody with passkeys. This is convenient, but also secure. When you're thinking about building for the next wave, how does your approach change? Does it go from the 10% to the 90% when you're building for people that were in crypto and DeFi protocols very early on, and now we're just used to these more consumer-facing financial applications? Does your approach to what you're building and what you're focusing on change more to that 90%? Generally, how are you thinking about this?
Yeah, the way I think about it is, the fundamentals cannot change and shouldn't change, right? So we're not going to make things less secure. And for the power users that want to know the specific details and all the technical details and want to manage their seed phrases, for example, that experience isn't going to go anywhere. A good analogy is gaming. Back in 2018, blockchain gaming, the games were pretty terrible. And the reason is the only people excited to play these games were Ethereum people that were excited about Ethereum. And it's like, oh, cool, I can now play a game on Ethereum. And that was their goal. It wasn't these games weren't trying to appeal to mainstream gamers. Today, we see actually really, really good games, being built on chain. And there are still benefits of building those on the blockchain. But as a prerequisite, in order to build these for a broader audience, what you have to do is make all that stuff added but optional to go into the details, right? So you don't need to actually set up your MetaMask to play the game. But hey, if you want to take self-custody of your assets, that's an option that's available. So I think it's actually solving these two together. It's giving an excellent UX to users, and also giving optionality for users to go more deeply if they want to. But for those users that don't want to or can't, because let's be honest, we're not going to get to Robinhood scale with everyone managing their seed phrase and knowing all the technical details of every, which wallet and even which chain they want to use. I give this other example, which is, imagine you go to YouTube and you have you want to watch a video, and you get this pop-up that says, hey, would you like to watch your video today on AWS, Amazon servers, or GCP, Google servers? And you as a user are just like, I don't know what that means. I really just want to watch my video. And I think today there is this ultra focus on backend infrastructure. And maybe it's ironic for me to say it because, I represent some of that backend infrastructure, but I'm also realistic that in order for that backend infrastructure to succeed and get past the point of the saturated crypto insider market, as you will, those who, as you said, were around and know how to, use the blockchain, intimately, we actually need to build abstracted experiences that attract others as well. And hey, if they want to go deeper, it's absolutely available for them. But the key is, and this is what Derek said, we have to give them an experience that doesn't sacrifice their security, right? So we have to build good UX around what we're building in ways that it's accessible, but still doesn't sacrifice their security. If they just want to stop there and say, hey, I don't actually want to go deeper and dive into the technical bits of the exact transaction hash detail level of what I'm doing.
Yeah, and to maybe give another example to what Stephen was saying, right? So just recently, maybe last week, we launched a three-way collaboration between 𝘠𝘠𝘦, OCL, and 𝘠𝘪𝘴. Right, so we 𝘠𝘪𝘴 is powering the passkey logging for the 𝘠𝘠𝘦 new for the new 𝘠𝘠𝘦 wallet. So that's a great example of a very easy logging method that anyone with access to Face ID to iPhone can use. But it's actually also fundamentally secure in the sense that there's no middleman sitting between the user and the blockchain, right? Because because we came up with a technology that essentially allows the user, they essentially allow the blockchain to directly verify passkey logins through smart contracts. And that's also another, by the way, like a great example of something that's only possible because of the chain level innovation, right? Because during that flow, the very reason why the blockchain is able to verify passkeys efficiently is because Arbitrum actually implemented this new roll-up improvement technology that allows the blockchain itself to validate passkey signatures in a very gas-efficient way, right? So that's like a great example of a very easy logging that's entirely non-custodial, super secure, and yet it's also only enabled because of innovation at both the wallets and the chain level.
Could you maybe just elaborate a bit on the verification process? I'm just super curious.
Yeah,
you can get as technical as you like. Just yeah.
Sure, yeah. So basically, like up until recently, right? Like the EVM can only verify a few signature types, right? So like the when you hear terms like ECDSA, so that's like the signature algorithm that the EVM is able to run. So Arbitrum is one of the first rollups to implement a support for a different signature algorithm, P256, that is also the algorithm that powers passkeys. So it just means that the signatures generated by your passkey devices, such as your iPhone, can now be validated natively inside the EVM, as opposed to a much less gas-efficient approach, which is to implement that verification algorithm through smart contracts. So before this Arbitrum updates, it was also possible to validate passkey signatures on chain. It was just really expensive. Like validating a single signature would cost like more than $1 million in gas, which translates to maybe like $10, right? So obviously like no one's gonna send like a $10 transaction just to validate a signature, right? But after these updates, it only costs a few thousands in gas, which translates to maybe like 1 cent, right? So that's like literally a thousandfold improvements that's made it possible for the first time for users to use a consumer device to manage their wallets fully on chain in a fully non-custodial way without any middleman.
Thanks for the explanation, Derek. Guys, we only got a few minutes left before we have to let you go. I'd like to quickly zoom out and speak about crypto M&A in general and how this process went down. We were talking a little bit earlier on the stream about the back and forth that Layer 0 and Wormhole are having in acquiring Stargate. And I'm just curious, maybe there's a piece of advice. Your process seemed to go so smoothly. What would you guys recommend to Layer 0, Wormhole, and Stargate when they're going through this M&A process?
From my perspective, it all comes down to alignment of vision, alignment of people, and working with people you want to, and everything else follows from there. You can have two fantastic products, but if the people aren't going to get along and don't have a shared vision, like ultimately it's not going to work out. And on the other hand, you can have two teams that might be vastly different, but if they're aligned on a vision and what they can accomplish together and excited about that, which as Derek said before, I think we had very early on, from the first meeting, Derek, I don't want to speak for Derek, but he wrote recently in his blog post that they've had many acquisition offers in the past, but ultimately kind of, when there's chemistry and you're excited and something's going to work together. And I think that's what we had from the very beginning. And, obviously these processes take long. There's legal diligence. There's a lot that goes into them. But ultimately, if everyone's rowing in the same direction and aligned, things tend to work out. We had that with Prism. We had that with Zero Dev. And so we're 2 for 2 in our case. At least that's from the off-chain labs perspective.
And Derek, from the founder's perspective, then, like, is this what you thought that you were going to do when you created Zero Dev? I think in crypto, the question is like launch a token, sell out, build, reach product market fit, profitability, et cetera. There's different kind of venues, or they kind of come together. What was this? What you expected? What was your experience?
I think I expected to revolutionize Web3 UX when I started Zero Dev, and I really think that off-chain labs will amplify that ambition, right? So I think my advice to other crypto founders that might be looking to be acquired would be that join a company that you will actually be excited working at, right? Because I think when you are getting acquired, there are many different things you can optimize for, right? You can obviously optimize for profits, just like how much money you're personally getting, and that's certainly like certainly very important. But I think like ultimately, I think when we decide to join Option Labs, we are trying to make 𝘰𝘀𝘀𝑑𝘀 100x better, right? That's what I'm saying to all our customers right now, which is that with the backing of Option Labs, 𝘰𝘀𝑑𝘀 will be 100x better. So I feel like, my advice to crypto founders is just to, if you love your product, join a company that will actually make your products 100x better. And it's very hard to find an acquirer like that, but when you do, I think you will know it. Yeah.
It's got to make you feel good there, Steven. Thanks, guys. Yeah, it's been a pleasure, and congratulations on the collaboration. I look forward to it, and I as on-chain users of some time, even small things like shifting from MetaMask to 𝘬𝘭𝘐 was a big step. Small things to using passkeys on Infinex, using Face ID, things that Privy brought, things that 𝘰𝘀𝘀𝘀 brought. Like, it's just really been fun to be a part of it and see it grow. And I just keep looking forward to using more and more of these innovations that teams like yourselves bring to market, and make it better for all of us. So genuinely appreciate your efforts in making all of our financial experiences, which are now, crypto is no longer plan B for a lot of us. It is very much plan A. And so we appreciate all the efforts.
Thank you so much for having us on, and likewise, definitely more of that to come from us together.
Thank you, Andy.
Awesome.
Thank you, Andy and Robbie, for having us.
Yeah,
absolutely.
Cheers, guys.
See you guys again soon. Congrats.
Best of luck.
Bye.
Alrighty, guys. Man, crypto M&A is on. We've got all the big acquisitions like Stripe and Privy. I should have asked them about that. Then we've got the on-chain ones, the on-chain wars happening with Wormhole.
Mm-hmm.
It looks like our team has just put out a clip that makes me look like I'm absolutely taking a crap on a cross. That's not great for my brand, so I'm gonna have to clarify that one.
Yeah, I was a little bit curious when you brought that up as well. The interop is just a hairy space. There's a lot going on there, and it is very, very competitive. Next up, we've got lineup is so stacked today. Let's see who do we have up next. Rob from Infinify. Going to be another exciting conversation. I think Steven's advice on when and who to partner with on an acquisition makes a ton of sense, especially if you're going to be working. In Derek's case and 𝘰𝘀𝘀𝑑𝘀's case, it was an acqui-hire, so he will continue
acqui-hire.
Continue to be working at Off-Chain Labs, which makes it even more important to be aligned with the long-term vision and the purpose of the acquiring company.
Dude, how about that XRP Chainlink clip yesterday? Things hitting like 120,000 views. People are dude, Chainlink God is he is relentless on Twitter.
Yeah, he is. He doesn't stop. And, sometimes the Link Marines, the XRP Army, it's almost difficult to tell whether these accounts are real. That's just generally the case on Twitter. But Chainlink God doesn't care. He goes at anyone, bot, human, doesn't matter. Chainlink God is slapping.
No matter what you say, do, or anything, he will respond, even if you've never tweeted in your life. Like, it's hilarious. All right, guys. Up next, we've got Rob from Infinify, institutional DeFi player. New guys on the block. I have not really much clue as to what they're doing, but I know they were on DeFi Dad the other week, so I wanted to bring them on and talk to them about what institutions want to see in DeFi. I think the subject of this convo is really like, how is this DAT rush going to lead to institutional DeFi exposure? What assets should we look to invest in as a result? How will we think about this? Haseeb also put out the proof of stake thought, let's say, yesterday, so want to get Rob's take on that too. And yeah, guys, we'll get Rob up here in just a sec and be ready to rock and roll. Stream is flowing today.
Feels good. Feels good to be back. Definitely shook off a little bit of the rust that we had, and now we are smooth sailing. Looking forward to getting daily. Feels like we're in motion once again. Yeah. I'd love to get the follow-up on Haseeb's revamp of proof of stake. And I think generally this is a a concept that we can continue to prove out, which is people come on the show, they make a ton of predictions. We don't end up seeing whether these predictions pan out or not. And so we can kind of go back and reevaluate.
Dude,
if we were correct.
𝘗𝘗𝘦 tweeted, after careful consideration, I have too thrown my hat in the ring. The Stargate team and ecosystem is world class and deserves the best outcome they can get from an acquisition deal. This is why I am declaring my personal intent to acquire Stargate. I am willing to pay, distributed amongst STG holders, the total sum of $350.
𝘗𝘗𝘦's a character. Love that guy.
All right, well, we're gonna get Rob up. We're gonna talk institutional DeFi and get him ready to rock and roll. We got Rob, and then we got Ruslan, 2 DeFi combos to wrap us up today. Been a fun stream so far. Let's
Andy,
go.
One more thing on this wormhole situation.
Yeah. What's up?
Wormhole quote tweeted their own after they said we're gonna put a bid in. They said, thank you to Stargate leadership team for reaching out and engaging in appropriate consideration of our bid. Basically acknowledging that Stargate was considering Wormhole's offer.
Mm-hmm.
And then the founder of Stargate, the foundation lead of Stargate, replies and says, we literally have not spoken yet. I gave you my Telegram. You haven't messaged me or reply to my comment.
Bruh. I just commented bruh in all caps.
So funny.
All right, we got Rob in the back. Let's get Rob up on stage. Rob, welcome to the show. Welcome to the Rollup TV. First time. Welcome to the big leagues, brother. Cheers, man. There you go.
You made it.
We wanted to talk today about your take on some of the DATs and how these are going to extend into DeFi, what the institutions want, where there's good yields, what you guys are doing for them and for users, and more. So yeah, man, maybe just a quick intro to yourself.
Yeah.
Rob and I have no idea who you are, where you come from, if you're trustworthy, if you build good tech, but DeFi Dad said so. So I'm here today to judge myself. No, I'm kidding. But yeah, intro and yeah, let's jump in. Okay.
Love it. And Rob, tell us about your background. You mentioned this is your second big project, been building in the space 4 years. It's a great explanation of Infinify. But what were you doing before you got into crypto, and how did you end up here? It sounds fascinating. Okay.
Yeah. Yeah. Yep. Nice. What's been your best DeFi yield farm ever? Where's the crazy gains came from? Okay. On Ethereum. Okay. Oh my God. Bruh. Wait, it was called Youth Nation? Unification. Yeah. So he made you $89,900 off of $100. Wow. Wow. Our producer's back there wondering why he's working a damn salary. The fuck?
I'm wondering the same thing. So
All right,
Rob,
yeah,
yeah.
go ahead, Rob.
No, please. I mean, just catch us up. You know, where did we go, Andy? What's on your mind? What are you thinking? I mean, curious to see like where you went from this validator to ultimately building your first project and continuing to be a part of DeFi. Mm-hmm. Before we get into Infinify, everything, I mean, almost 100 million TVL, and you guys are doing great things. I am just quickly curious, when you're raising for a new project, and unfortunately an exploit occurred on maybe a previous project, did VCs care to? Did they give that much weight? Was that sort of a cause for concern, or was it okay?
And both have operated without issue ever since. And that was the real thing, is we came to these VCs 2 years later, after all this had happened, with a sterling track record ever since, with that proof that, hey, you get knocked down in this industry, you got one chance to get back up, and if you don't get back up perfectly, no one's ever going to trust you again. We got back up, and we did everything right. We got multiple audits. We ran bug bounties. We had active monitoring solutions. And that's the same attitude that we've carried forward into Infinify. I actually think to a certain degree, knowing that I'd been through that experience was considered an asset, because they knew that when I said that I took security seriously, that I meant it. Because I mean, I'll pay any amount of money to never feel that way again in my life.
Yeah.
We spent about 1/10 of our raise $300,000 on security for Infinify. We got 2 audits, Sparebit and Cantina. We got full verification from 𝘱𝘭𝘅, which, if you aren't aware, is the diamond standard for security. It is a mathematical proof that your code is secure. We audit every single thing that we release. We actually have a Sparebit on retainer now. So anytime we want to create something new, like add a new PT that doesn't have a handler properly, even if it's just 2 lines of code, we still pay for the review. Because if you don't do that, the cost benefit never makes sense to gamble with security. You cannot play with those numbers. You cannot compromise on that.
Yeah,
So don't.
of course. Well, congrats on overcoming some of the early challenges, and now congrats to 86 million TVL in Infinify. Pendle is obviously a big, partner and contributor to this new yield landscape. And we were curious to talk about some of the institutional flows. You see all these things that are happening on Ethereum. There's entities, traditional institutions that are gobbling up ETH at every chance they get. And the theory is now that they're going to go deploy that capital and make it a productive asset. I'm curious, when you're kind of crossing the chasm between DeFi and TradFi, and TradFi is looking to harness some of the yields available in DeFi, what are you hearing from these institutions? What are they looking for, and how are you able to help them?
Are we talking about in the context of the DATs mentioned earlier, or just in general?
DATs would be great. Also, in general, if you have any other institutional partners or conversations, connections with institutions beyond DATs.
So really, there's several things. I'm getting texts from multiple people saying the audience is having trouble hearing me, by the way.
We solved it.
Okay, perfect. Just wanted to let you know.
Thanks,
Awesome.
man. Yeah,
So-
sorry about that.
No, it's fine. Anyways, with institutions, where we're really seeing 2 things. One is the DAT angle, and that's a brand new angle. These guys, what they're looking for is quite different from the earlier conversations we've been having, which is more on the RWA side. I'll start with the DATs, then I'll jump right over to the RWAs. The DATs are a unique group since they're kind of straddling the world between institutional finance and DeFi. They already are, digital asset native, even if they haven't necessarily used DeFi. But they've got huge amounts of capital in digital assets now. And what they're all realizing is, hey, we have this money. How do we set ourselves apart from all our competitors now? What's our edge? And so when I'm having talks with them, the conversations are typically around, hey, how can you help us earn yield on these assets? What we're able to offer them that no one else can, and why I'm enjoying the conversation that we're having so far so much, is because while they can get decent yields in other places in DeFi, they have to borrow against their base asset just to get the capital to play within stables in the first place. And if you're using Bitcoin and you take your Bitcoin to Aave, you're going to pay about 4 to 5% to borrow USDC against it. Now you have to find a place to park those stables that is, one, scalable to the billions to tens of billions, which a lot of the really high yield stuff is not. And 2, that is making a high enough rate of return that it's actually worth doing in the first place. Because if you're only able to find a place like another Aave that's also yielding 4 to 5%, you can't do anything. You have no spread, you can't make any extra money, and you can't set yourself apart. The obvious choice for them would be to deploy directly into Pendle or into Athena themselves, since they both have the scale that these guys are after. Unfortunately, since they're borrowing against their assets in this scenario, they need to be able to unwind that loop immediately. They have to be able to get back to their liquid capital and pay off that loan so they can rebalance that portfolio. So they can't use things like SUSDE, where there's a 7-day unstaking period. And they can't use things like Pendle, where your maturities are going to range for anyway from 1 week up to 13. I've seen even 26-week PTs out there. And so they're in an interesting place because those are the best yields in DeFi, but they can't access them directly until I enter the picture. That's where Infinify is able to offer them something useful. We're able to turn to them and say, hey, we can give you access to these assets. Oh yeah, yeah. And I
You're a
love talking
fucking
about my
funny guy, man. You're a funny guy.
dude.
I appreciate it. I like
huge
it.
fan
Keep
of what
it
I built.
rolling.
I know I've got something cool here.
All right, I'm bullish, dude.
First time I saw this thing, I was like, holy shit, these numbers don't make any
Yeah.
damn sense.
Hell yeah.
And then I like triple checked it. It's like, oh, okay, numbers do make
Okay.
some sense. But yeah, that's what we can offer them. Is we're a more liquid way to access Pendulum Theta. Since you deposit, we're deploying a portion of your capital to those assets. We're not deploying all of it, and there's still money in the reserve. So when you need to rebalance, you can withdraw your liquid capital, do your rebalance, re-enter the trade like nothing happened, and it's all atomic in USDC. So that works for them. That works for them very well. Now, on the RWA side, and I should add this last bit. The angle there, yeah, since we're making 8-9%, it's not the 13% of Pendle itself, but you're still making a 5% spread, which is enough. On the RWA side, with those guys, we're going at it from a different angle, and they're coming to us with a different angle. The reason that RWAs are working as well as they are in DeFi right now is that people on chain want high quality yields in traditional assets. There's a certain subsector of this industry that wants that and otherwise couldn't access it in their native country. Like maybe you live somewhere that you can't get exposure to Apollo's ACRED. Maybe you can't even get UST bills. So you're willing to go through whatever hoops you have to and maybe even get a little lower yield than if you did it directly in the States, just so you can get access to that 5 to 10% yield. But that's still a pretty small group of people because that's not the best yields in DeFi by and large. And that's not a huge chunk of DeFi participants who are willing to do the KYC AML needed to do that. So these RWA players, they've come on chain and they're realizing, hey, the flow from on chain to off chain isn't that strong. Well, how do we get people to come on chain from off chain? How do we get TradFi capital to care about coming on chain? And there's so far been really just one reason. That's leverage. A lot of these guys are super interested. Oh, okay, not a lot. They have some participants from off-chain world who would like to get higher leverage on their positions. Basically, they go to Aave, they say you borrow against SUSDE in USDC, you go get more SUSDE, and you loop that. Now you're making 50%. They want to do that on T-bills, or they want to do that on Apollo's ACRED, or they want to do that on some other tokenized private credit fund. Maybe they want to do that with their Fidelity position, some other ETF. There's all sorts of stuff that there's like a subset of investors who want that leverage. But it's still not that large because that's a pretty high risk position to have to manage. Most of these guys are used to margin calls, not instant liquidations. So they do not love that they're in that position. And so it's still a niche industry. And what they're looking for with their conversations with us is a way to unlock the rest of TradFi. That's where we come in. Because with Infinify, we can hold assets like, credit funds. We can hold assets like ETFs. Yep. We can hold things that have, a certain duration. Might be, I think the shortest I've seen is 45-day, but more typical is actually like 90-day stuff. That's considered short by TradFi standards.
Yeah. And you guys manage that risk through your own curated strategies effectively? Like you manage the duration risk of certain assets with regards to like their price change basically, or the delta in the value that you started with compared to what you end with through your own kind of strategies basically?
Well, with most of this stuff, it's delta neutral. So
Okay,
if you're talking about tokenized T-bills, it's just yield control. If you're talking about ETFs, by and large, those are also fairly delta neutral. You'd have to see a pretty big hit for an ETF to have a significant drawdown since they operate across a broad spectrum. So what we're doing here when we're working on the RWA side is we're taking their existing depositors and having them become duration depositors in Infinify, the same way that we take existing PT depositors and have them proxy their deposits through us. And when they do that, they get a higher rate of return than they get on the raw PT. Since what we're doing is we're taking, you remember those liquid depositors who have that optionality? Well, say 75% of their capital is in PTs. We're not paying them the interest that 75% of their capital being in PTs generates. We're paying them the interest that, say, 60% of their capital being in PTs would generate. And they're still getting a higher yield than they would on Aave, so they don't feel shortchanged. And then we're taking that remaining 15% there, and we're giving it to the duration depositors. Since they're in that junior tranche, they're taking on that duration risk. And we're giving them that premium over what they'd get if they were just in the PTs on their own. So that's how those guys are making it, because they're getting money that's they're getting almost leverage, but it's not leverage in the way we think about it. They're earning with like $1.15 instead of $1 worth of PTs.
Yeah.
Right.
How do you think Infinify goes from where you guys are now to like multiple billions in TVL? On like how do you guys get to 10 billion TVL? Like, what is is it institutions? Is it retail? Like, what partners do you need to work with? What levers do you need to pull? Like what is the vision to get to 10 billion? Yep.
So we need to expand both our liquid and duration depositors in the short term. And then in the long term, it's RWA. Short term, on the duration side, we just keep hammering on Pendle and Athena users because they like us. They are getting higher rates than they would in just raw Pendle or raw Athena. Pendle and Athena like it because they're getting more TVL as a result, since we're putting all that liquid capital in there every time someone deposits on our illiquid side. And so it's a win-win-win. You know, their users get higher yield, they get higher TVL, and we get users and TVL. So works for everyone. We just keep expanding our market segment there, keep informing more people, hey, if you hold a PT, you can get a higher yield by proxying that deposit through Infinify. That's the message. On the liquid side, we keep bringing in people who, you know, maybe they don't want to hold PTs and SUSD directly. Maybe they want higher yields than they're getting on lending markets, though. Keep appealing to them. We go after that DAT money. We work with, DeFi native asset managers. Got a few of those in the pipeline already. Those guys who like talked to me and said, hey, we love this product, but can you make it more liquid? They're now one of my future clients because I solved their problem. So we just keep bringing in that capital. That gets us to about $1 billion. And that's me being fairly conservative here. Then we go from there. We keep doing this. We can pretty easily hit 10 just because Pendle, Athena, and Aave are all huge. Yeah. This is literally just rolling their capital into us, proxying it through us. But the real growth vector here, where we go from 10 to 100, that's RWAs. And that's because we can take those TradFi guys who hold, say, an Apollo ETF or a token or a Fidelity ETF. And by running that through Infinify, the same way we run those PT depositors through Infinify, we're giving them a higher rate of return on the same exposure that they already have. We're taking them from 10% APR on their ETF to 13% APR on their ETF. And we're in the early stages of setting up a proof of concept around this. We bring in the DATs. We help them do these loops that I was telling you about, help them run their cash and carry trades. We get the liquid capital on that side from that. And now pretty quickly, we're sitting at $100 billion in TVL. My vision for Infinify is to basically have all of TradFi running through this, have neobanks be the ones giving me the liquid capital.
There we go.
Just, replace the banks.
Now we're talking. So Pendle, Athena, core partners here. What are the other core partners that you would need to get this vision through? I think you kind of mentioned some, but rattle them off for us. Who is important for Infinify to get to 10 bill TVL?
In the DeFi world or in the TradFi world?
Both.
Okay. DeFi world, you get me Aave. I'm very happy. Aave looping immediately makes my liquid side blow up, which is exactly what I want. Already working with Morpho, good guys, good partnerships, moving quite well. But the borrow rates on Aave are god tier. And that is why SUSD has added, 5 billion in the past month or so, just because they can run really good loops there. In terms of the TradFi side, give me any significant neobank. Give me a Revolut. Actually, on the DeFi side, still give me a Veda. I'd love to get the Veda guys using me as a liquid management strategy. They're running huge strategies with the plasma money right now on Aave. Put that through me. I'll give you a higher rate. TradFi side, I could get Revolut. Be very happy. Good neobank. probably the first one people think of when they think of a neobank. If I get any credit union or any traditional small bank, fantastic partners. On the duration side, Apollo would be fantastic. Fidelity would be fantastic. Probably the top two that I'm currently thinking about, just because they have significant credit ETFs with good traction.
Beautiful. Rob, last thing for you from my end. When you were getting into DeFi and looking at the space as a whole, why did you choose to build Infinify? Why did you choose to build in DeFi? And do you feel that the opportunity that you first saw is still the opportunity that you're seeing today, or has that opportunity changed?
I've always been very sympathetic to the CryptoPunk ethos. That's what got me into Bitcoin in the first place. And so when I heard about DeFi, I'd seen all the craziness with debanking in the late 2010s. I'd seen all the contention around the financial system and how it wasn't fair. I'd seen the one that was the most recent, why I hopped back into crypto in the first place in 21, was GameStop and how rigged that whole thing was. And so that, combined with a natural predilection toward libertarianism, catapulted me into DeFi. I wanted to build a system that was more fair, that was better, that was more just based on meritocracy. That's the term. So I think it's not the purest version of the original thesis that we have now. It's more of a synthesis of, what happened with TradFi coming in and DeFi staying, pure CryptoPunk. It was never going to be pure cypherpunk. It was always going to have to meld with the existing order, but in doing so, it destroys the existing order, which I think is still a pretty damn good thing. Why did I build Infinify? I built Infinify because I've been fascinated with duration assets for years. I think they're an underrepresented segment of the ecosystem. They're very prevalent in TradFi, and no one else was focusing on them here. So I thought, okay, I'll focus on them. Everyone was looking right, so I looked left. And for a long time, it did not work. For a long time, it was really honestly a bad idea, and I found myself questioning, what am I even doing? But I was in the right place at the right time to have the right question asked, which is, how do you make it more liquid? That is the fundamental problem of banking. That is the original problem that inspired people to pool their money in the first place 1,000 years ago. And when I was asked it and tried to solve it, I came up with a completely new way of approaching it that no one else had thought of. That was Infinify. And once I realized I've got a system here that gives everyone a higher yield, I had to build it. There wasn't a choice. It's the natural next thing. This is what actually takes DeFi out to the masses. This is the kind of system that operates better than banks do. This does exactly what they do, but it does it without all the overhead and all the middlemen. It's automated.
Yeah, man.
And that aligns to the original vision. I just had to be the guy to realize it.
Dude, are you from Texas?
No, I'm from Georgia, Atlanta in specific.
Nice, man. Nice. I went to UF, so I don't know if you went to UGA, but go Gators. So did Rob.
I'm Georgia Tech, so I'll go right there
Nice.
with you on not a fan of UGA. Go Gators.
There you go.
Go Gators.
Rob, it's been a pleasure, man. Thanks for joining us. I hope you guys get to that 10 bill mark faster than you expect. I think some of these things, like on our show, it's been like 5-6 years, and last year has been exponential, whereas the first couple of years were slow. Same thing happens in a lot of spaces. So hope that you guys see an exponential growth curve coming soon.
I appreciate it a ton. Thanks for having me.
Cheers, Rob.
Thanks,
Pleasure,
Rob.
man.
Take care.
Speak soon. All right, guys. Sick convo. I think Infinify is one of the newer, more interesting DeFi primitives. We wanted to have Rob on because we hadn't heard about it. We hadn't talked to him about it. And frankly, we thought it was going to be an interesting conversation. That it was. Sorry about the audio issues in the beginning there. It was on our side. It was working, but apparently on the output, we had some issue. That's all good. We're going to roll into the final guest, 𝘱𝘓𝘂. 𝘱𝘓𝘂 is the founder of Extended, a new perps DEX, which is basically the best business in crypto today. I think there are no other businesses that are generating consistent revenue day in and day out like PerpsDEXs. Perhaps prediction markets are up there. But we'll talk to him about his deployment, their work that they're doing on StarkNet, some of their features, just his general outlook on the space as a whole. And yeah, that'll end up wrapping us for the day. And yeah, man, Rob, what's going on, brother?
I think it's interesting when we hear about these DeFi yield generating protocols, and we think back to when we got started, and Sushi and Yams and Yearn like generating 100-200%. That now we look at what's going on today and we're thinking to ourselves, yeah, like, why is DeFi still interesting? And then we have Rob come on from Infinify and tell us about going from 8.5-9% on Pendle and squeezing out 13%. And that is a massive appeal to institutions. And it's just such a different mindset now that institutions are deploying capital. I think stablecoins probably opened up the door to institutional capital quite a bit. Now they're looking to monetize these stablecoins that they have on their books. And it's so different from DeFi summer 2020, where it was a much higher capital velocity. You had much higher yields. They didn't last as long. Now we're looking to lock in the safest, highest yields on 90 days is considered short-term duration. I remember when APRs would last 4 hours on algo stables. Just such a different time.
Yeah. I mean, the good news is that institutions have long time horizons, meaning that we can have more sustainable, flows. But I'm not sure how. I'm not sure that we ever get that run again. But there's a reason why things happen once in inefficient markets, and right. I mean. I think it's better in the past. I think that look for DeFi isn't exactly the look that we're going for anymore.
Well, no, I think times are changing, right? And so if we look at where the space is today, I mean, we have all this infrastructure, and it makes more sense to build sustainable business models for this infrastructure using more sustainable capital. Right. And so that's what the institutions are bringing us. They don't need as high of yields. They're bringing solid, sustainable capital to Ethereum and several infrastructure providers and chains. I'll double down on what you said earlier. Perpetuals markets are the most successful business model in crypto right now. We've got Ruslan that's going to be on in just a moment. I think we've got him ready behind the scenes. Why don't we bring him up when we can?
Yeah, man. I mean, I think that I think that these markets are just going to consistently be growing. I mean, like if you look at the perps market share as a whole, we're still early. We have Coinbase launched their perps in the US. I think we're going to see more and more competition. It's almost like we have this battle happening from two sides of the spectrum for who can dominate this market. One thing for sure is I think people are underestimating how big this market can get. We've got Ruslan on stage. Welcome to the show, Ruslan, and welcome to the Rollup TV. Congratulations on the extended launch. How you doing today, man? Yeah, things are going well, man. It's been a good stream, and you are our last guest. Certainly not least. I think our audience would appreciate getting to know you a bit before we jump into what you're building. So maybe tell us your crypto story, tell us your background. Why are you the guy to build a PerpsDEX?
So as for myself, basically I joined crypto full-time in 2021, right when I joined Revolut. Revolut is the largest European neobank. It also has a large presence in crypto with over 10 million crypto users. I don't think many people realize, but in reality, Revolut is one of the biggest crypto players globally, right? And probably the biggest crypto player in Europe. And there I was the head of crypto operations, essentially responsible for the P&L of the crypto department. Then when I joined back in 2021, essentially crypto department was just a very small team, right? With a very simple buy and sell product with 1,000 of coins launched, right? And essentially my responsibility was to grow the department, define the roadmap, launch new products, hire the team. And I've been doing that for 2 years. So when I was leaving, effectively, it was a relatively big business, right? Even for the size of Revolut, with over 1 million of active monthly crypto users, right? Who were transacting hundreds of millions of volume, right, on spot. And essentially, I left in 2023 along with a couple of my colleagues. So essentially, in total, at Extended, we're a 10 people team, and 8 of the team members are my former colleagues at Revolut, right? And effectively, we decided to build Extended, right? With Extended, we have a very simple idea, right? We want to build essentially a DeFi perps exchange, right? With integrated cross-asset collateral margin with perps, spot, and integrated lending markets. That's on very high level.
Amazing. I think, we see more and more perpetual exchanges, and each time there's a little bit of a differentiator. Maybe it's a new asset class, maybe it's a different functionality, maybe it's a different user experience. What is the differentiator on Extended versus some of the other existing perpetuals exchanges?
Yeah, sure. So look, the biggest item on our roadmap is to essentially launch cross-asset collateral margin, right? Meaning that users will be able to post non-stable coin assets, right? Including, I don't know, LBTC, WBTC, wrapped, ETH, whatever we support as a collateral to trade USDC settled perps, right? And essentially that will also open up as an opportunity, right, to effectively launch a spot market later on, and to have the unified margin across multiple, essentially, business lines, right? Which will be perps, obviously, what we currently have, what will be spot, right? And then we'll also have an integrated lending market. Once you have that core foundation, right, essentially you can add any other products on top of the unified margin if we decide to do so. And that's like differentiation from the competitive roadmap.
Yeah, you got to think that the experience working at Revolut provides you guys just systematically internally a differentiator from the way that you guys operate, chemistry as a team, also just experience building these products at scale. Was there any specific like story or experience working at Revolut that kind of led you to build Extended? So you've got this idea, you've got the differentiator that you mentioned now, but kind of just like rewinding a sec, was there a specific moment or kind of experience that you thought that this was the right path, and how did you kind of gather your teammates to make the jump?
Yeah, there was actually like a very specific moment which I remember. So back in late 2022, right, we as Revolut were in discussions with many players in the space, right, discussing various like collaboration opportunities, just exploring what we can do together, etc., etc. And obviously, as part of those discussions, we also had multiple calls with FTX back then. And I remember that basically we were just having all those conversations. I don't even remember like the specific topics or the opportunities that we're exploring, but effectively the entire narrative was that they were ready to conquer the world, right? And that effectively they were super positive, super bullish, optimistic, like that they are the best, etc., etc. And then like just probably a couple of days after another call like that, they crashed, right? And at that point, I just had a very simple idea, right? That basically you can recreate that experience, but you can effectively completely remove the trust assumptions from the operator of the exchange, meaning that all the transactions will be settled on chain, right? Like all the orders, trades, etc., everything will be signed, and effectively custody will remain with the users, right? And back then, basically, I just approached a couple of my former colleagues with that idea, the guys who I thought are the most relevant, right? So the guy who was building a Revolut exchange, right? And then effectively the head of engineering of the crypto department. And that's how we started off, right?
So funny, man. I mean, I was just with a friend yesterday who was like, man, I finally got my 10 grand from FTX. Took me so long, and I kept getting all these spam emails of telling me to connect my wallet and claim this from this email, and just the lasting impact of FTX continues to just amaze me across different areas of the industry, from builders like yourself.
That's quite crazy. Honestly, I stopped reading those emails, right?
Yeah. And I still get them from Celsius scammers. People trying to
Yes.
scam me from Celsius. And I was like, dude, I didn't even have funds on Celsius. I mean, maybe I had an account, but all right. So let's get into extended. You guys chose to build this on Starknet. Why? Why Starknet? Why is this a good place to build? And how does it enable the product experience that you're looking for?
Yeah, look, it's very simple, right? Like when it boils down to the core principles, effectively, we don't want to control the settlement layer, right? We want the settlement layer to be independent of us, right? Meaning that essentially we don't want to build our own chain, right, on which the transactions will be settled. We want it to be an independent ecosystem, right? So that effectively the trust assumptions with the user in regards to the user funds, they are not with us, they are with the chain, right? And we merely serve as an operator of the exchange. We don't have access to the user funds, right? There is no way we can effectively impact how the transactions are settled, right? Then that's the first principle, right? The second principle is that we require high throughput, low latency, right? And the chain needs to be performant. I think among the existing chains, right, probably in the EVM ecosystem, right, Starknet would be the only one which would be capable to meet our requirements in terms of throughput and latency. So I can give you an example that when we started our migration on the first day, when let's say 10 or 20% of our users migrated, right, we're hitting 200 trades per second. And I don't think we would have been able to settle that amount of trades, right, on any other public chain. And we have a clear path how to 10x it, how to 20x it, right? So effectively, I would say that the choice boils down purely to tech, right? Now, obviously, from the user standpoint, essentially the way we designed it is that the user doesn't need to interact with Starknet at all in case they don't want to, right? So essentially they can connect an EVM wallet, they can do a deposit from any EVM chain, right? They can do withdrawal to any support EVM chain. Effectively, Starknet for now is mainly a settlement layer, right? And probably like 95 or even maybe 99% of our 99% of our existing users, right, are actually non-Starknet users, or just coming and trading on the exchange.
Got it.
Got it. Yeah, I mean, I think there's pros and cons to the chain thesis. I just like Hyperliquid is the example of they launched their own chain. They wanted to do it all their own way.
Yes.
You guys are taking a different path. You think it's viable to compete with something that's on its own chain, basically.
Yeah, we do think like I don't think it's a better or worse solution, right? There are pros and cons to each of them, right? Effectively, the way we see it is that the funds will be effectively secured by Starknet, as well as the settlement will be secured by Starknet. Now, imagine that, let's say by the end of the year, right, we have that cross-asset collateral unified margin, where effectively we support spot, lending, perps, and it's all on Starknet. The settlement of all those products is on Starknet, right? There is nothing blocking us to launch our own chain, EVM compatible chain on top of that product while retaining all the user funds on the Starknet, right? And then we could also expose our margin logic, let's say as an ERC20 token to that chain, right? So yes, like we've chosen a different path in terms of the settlement, but that doesn't block us to launch our own chain in the longer run, right? Which will be just on top of our existing solution.
And so could you break that down a little bit? If you have your own chain, but then you use another chain like Starknet for settlement, what is it that is happening on your chain? How do you split the two?
Yes, so basically, currently the operator of the exchange is centralized, right? So we are running a centralized matching engine, right? A centralized liquidation engine. And then there are on-chain validations of the trading logic, which are happening on-chain, right? Now, if we were to launch our own chain on top of Starknet, we could distribute the operator of the exchange, right? Meaning that there would be multiple or many parties running the operator of the exchange, which is matching, liquidation, all the other services which are related to perp, spot, borrowing and lending markets, as well as we could have our own arbitrary logic, which is happening beyond matching and beyond trading. Right?
Is this effectively an L3, like a chain on top of Starknet?
I mean, it could be NL3, right? It could also work similarly to L1. It would be just basically a set of logic, business logic, which will be run in an arbitrary way, right? And the validators of that logic would be effectively validators of the extended ecosystem, right?
Yeah. Rustin, I'm curious, how do you guys go from where you guys are today to $1 billion a day of trading volume? What is that? What is the path that you see? This, like, what is going to be required of yourself to get there?
Yeah, look, so I think it's a couple of things. If I think about, probably it's three main things, right? What the first and the most important is that our exchange is stable, right? And we have decent liquidity, right? The second one is that we continue pushing on the product, right? And effectively continue releasing features that people like and use. So essentially the next feature which we're working on is that will allow users to tokenize their vault shares. Like, we have a vault on top of extended, right? And essentially users will be able to use assets which are locked inside of the vault as a collateral on the exchange, right? That will be our first step to support cross-asset collateral margin. Then as the next step, we'll add other spot assets to be supported as the collateral, right? So effectively pushing through the roadmap. And thirdly is just our approach to go to market, right? Basically, we're doing it purely organically. So we're not doing any paid go to market. Like, we're not paying affiliates, we're not paying market makers, et cetera, et cetera. We're just talking to the relevant people in the space, right? Trying them to get to use our products, explaining our roadmap. And I think we'll be pushing that roadmap further, right? So far, it's like it proved to work, right? We just need to see 10x, 20x, 100x.
Yeah.
Yeah. And so when you're bootstrapping this initial ecosystem of market makers to provide liquidity, bootstrap trading activity, you mentioned you're not paying these guys directly. You know, is there an incentive mechanism at play here? And what is the value proposition? What is the pitch?
Points.
You know?
Yeah. So, I mean, to start with, right, there are three types of market makers on the exchange, right? One is our vault, right? The second one is our internal market maker, which is independent of the vault, right? It's just basically we run a market maker. And thirdly, there are external market makers, right? As for the external market makers, basically there are two types of incentives, right? The first one is rebates, right? And the second one is points, right? I would say that we see a clear differentiation between the guys who mainly care about rebates, right, and the guys who mainly care about the points, right? But they're both types of players. And then, like, it just organically scales, right? Like, as soon as you start getting more taker volume, right, more market makers come and existing market makers start scaling, right? So basically it just goes hand in hand, right? Like, because I think otherwise it would be super inorganic, right? Imagine you had, like, I don't know, the best liquidity in the space, but if you don't have anyone to use that liquidity, right, that's effectively non-required, right?
Interesting. So the space is very cutthroat, right? Like, it is the most cutthroat space of all because it is the best business model in crypto. Are you a competitive guy?
I think I'm a very competitive guy.
Are you ready to risk it all to make extended win?
Definitely. I wouldn't do it otherwise.
Because I don't think the other founders care about anything else but seeing you guys lose.
I mean, from our side, honestly, we don't care much about competition, right? We just know that this is an amazing market, right? We know that the market structure will likely change in the long run because basically you have now Hyperliquid with like 80 or 90% market share. But if you look at the centralized exchanges, right, Binance is tops 35% of perps volume among CeFi exchanges. And I think naturally in the longer run, effectively DeFi perps will get to the same state, right? Just because it's such an amazing market, there will be new players coming in, right? Someone will win. We'll do our best to be that player, right?
Yeah, I agree. I mean, I think, right now it's not really. It's very much a one person take all kind of market.
Yeah.
But yeah, that likely shifts as you say.
Well, I'm curious how you think about that evolution, because usually it is a reinforcing flywheel. You have more taker volume, market makers come in, then you have better prices, and that attracts more taker volume. And so when you're thinking about the market share sort of starting to resemble centralized exchanges, How do you think, like these winners, how do you think it breaks down where that market share starts to diffuse amongst the rest of the market?
Yeah, look, it's a great question, right? I think that fundamentally there are a couple of things to that, right? Like one, there will be definitely users who are looking to find next Hyperliquid, right? And they are naturally the target audience of all the new perp dexes and of all the smaller perp dexes, right? And obviously we're also targeting those users, right? Because effectively they are ready to sacrifice efficiency, right, for the long-term opportunity, right? Let's say, yes, they will get a slightly worse liquidity, right, a bigger price impact, but they don't really care because in the long run, they're choosing who will win that market, right? That's one. Or who will be the second or third Hyperliquid, doesn't matter, right? Then the second way to win, I think, is to offer something which others don't, right? And in reality, I think like you just need to try, right? And you need to see what products will effectively stick with the community, right? So for us, we've done a couple of things in the past, right? So we've essentially launched TradFi markets. We saw that there is some uptake, but it's definitely not sufficient, right, to effectively win, right? Then now we're tokenizing our vault shares. So potentially there will be users who will think, okay, I'll better go trade on extended because I can put my money into the vault, those money will be working, right? And they can use that as the collateral, right? Then once we launch non-stable coin assets as the collateral, we'll effectively cater to a different group of users who will think, okay, now I can use I can put my WBTC to use on extended, right? And use that as a collateral, right? So effectively you need to win through features, right? And finally, I think you need to remain humble and focused on the product, on the growth, right? Like, and be focused on the long-term success.
You need to remain competitive, highly cutthroat, and ready to eat what you kill. Someone's got to chip away at that market share, Russ, and I think it could be you guys. Man, thanks for coming on. Appreciate your time. Appreciate the work that you've done pushing this out into mainnet now. Looking forward to seeing the trading volumes grow, getting to that $1 billion a day mark. We all know it's possible. And yeah, man, I appreciate you.
Thanks a lot. Thanks, Andy. Thanks, Robbie. Right. Thanks for amazing questions. And thanks a lot.
Yeah, man. Keep that killer attitude up. Keep that thing strong. All right.
Sure. Thanks.
Thanks, Russell.
See you guys.
Alrighty, Russell.
See you next time.
Cheers, man.
Bye-bye.
See you soon.
That's a good one. We talked about Hyperliquid Wave 2 last stream. I'm sure it's a similar audience that's going to have an interest in participating in the extended points program that I believe is ongoing now.
It is. I think that one, Lighter, Pacifica, there's a couple of really good perp dexes with points programs in there right now. So, and shout out to them for building on Starknet, and stoked for them to just kind of grow through this next phase. And yeah, guys, what a stream. It's been a day. We had four great guests, but really like six. Legion founders, Arbitrum co-founder, ZeroDev founder, CEO of Infinify, founder of Extended. Great stream. Wormhole and Layer Zero drama continues. We hit 50K on Twitter today. That's a vibe. Things are looking good. Things are looking up. And yeah, stoked to be here.
Love it. Another great stream. Andy, you're a great co-host. Thanks for being here. Marcelo, shout out all the guys behind the scenes.
Yep.
We're going to see you again tomorrow, right? We've got another full slate booked tomorrow, and we are just increasing the output of these streams by and large. So
yep. Until our producer gets the audio right, we're just going to keep adding the amount of guests on every single day, and keep them on the books. So apparently our audio is broken, so we'll have to have a conversation after the stream, I think. Here, get them out of there. All right, guys, thank you so much. See you soon.
See you next time. 50K.